Hi, I'm Jeff Lowe, Chief Executive Officer of Asian Sky Group and Asian Sky Media, here to give you an overview of our 2020 training report. The report is part of a virtual week, which will be taking place on March 4th and 5th. The report itself will be released on March 4th, along with this presentation on the same day. And then on the 5th, we'll have a number of short-form videos and a number of podcasts just to supplement everything you see in the data in the report itself. The report is only, of course, possible with, if you will, the kind contributions from a number of companies here in the Asia-Pacific region. So I must thank Sinojet, Omni Aviation, Wyvern, and IATA for their contributions to the 2020 training report. For those of us that are tuning in for the first time and are not familiar with Asian Sky Media, we produce a number of B2B and B2C reports through the year. We also have a series of marketing platforms that we make available to our clients to obviously help position their brands, create awareness in the Asia-Pacific region. We do a good job at that. We've been awarded 4 years in a row now from the Asian Business Aviation Association, Best Media. So as I said, good accolades for us. We seem to be doing the job well. We're also the official media partners for a number of trade shows and conferences through the Asia-Pacific region, and we'll continue to do so as we go forward. We've had a number of virtual weeks already. This is our last, and finally, the concluding report for the 2020 year. It started back in April with our business jet fleet report. We then followed that up with our charter week in July, our China GA week in October, and our virtual infrastructure week just in December. The weeks have proven to be highly successful. Certainly from our standpoint, we've been able to triple our viewers online during these weeks, and hopefully that has been matched by you, the viewers, in that you're getting added content and data and insight from the region. So, as I said, the last one for the year for 2020, but let's take a look at the report itself now. The report, if you're not familiar with it, focuses on the number of training schools in the region, and then breaks that down into looking at the training fleet. And then also typically there are a number of special sections that address some of the issues that the training schools are facing. Obviously in this year, 2020, that will be COVID, impacts on pilot demand, but we'll also look at other special training requirements throughout the region. So looking at the number of training schools, you can see that fortunately, they continue to grow. Training schools themselves are experiencing a 4% growth rate. Later in the report, you'll see some data about pilot demand, and you'll be happy to know that the growth rate in training schools is keeping pace with the demand of pilots. So hopefully no shortages will result in the region. Kind of keeping in match with the growth of these schools, not too surprising, you're seeing the growth in the fixed wing aircraft fleet and in the helicopter fleet matching that. So everything is kind of clipping along at a 4 or 5%, which is a good sign. Looking at the training schools themselves and the fleet breakdown, the biggest market for training is in Australia, followed then by China, India, Indonesia, Japan, and so on down the list. The number of schools in Australia is 146. That's 3 times the number in China. The interesting statistic here, though, is even though China has, if you will, 1/3 of the number of schools, its training fleet pretty much matches that in Australia. But as you can see from the statistics here, yes, it may have smaller schools, not as many schools, but some of them have a significant fleet. The China Aviation Flight University of China, for instance, has 246 fixed-wing aircraft. So again, the fleet is dispersed amongst a much, much smaller number of training schools. Looking at the training school growth then, the majority of that is happening in the mainland China market. You're seeing that it added 17 schools through the 2018-2020 period. Just to sort of note, most of that growth, though, is coming from Part 61 training schools that have converted over to Part 141. Part 61 is kind of a much more broad-based training, which includes ground and flight instructor training as well, whereas 141 is more dedicated specifically to pilots. So you can certainly see in the mainland China market, more and more of the schools are trending towards just doing the 141 training. Our report only counts the 141 schools, so that's why we're seeing the increase in the mainland China numbers. Interestingly, Australia is the one market that, if you will, contracted, and so it saw a decline in the number of training schools. So if you go back and think about that previous slide where China and Australia were fairly neck to neck, it's not too much of a stretch to see that not too longer in the future, you'll see the China training market outgrowing that of the Australian market, which is contracting. Now, looking at the Pacific fleet, you can see again, mainland China is adding the most number of aircraft, and that is producing the highest annual growth rate, 16%. Likewise, in the mainland China market, on the helicopter side, you're also seeing significant double-digit growth of 20%. Again, just a note, a lot of the mainland Chinese growth is coming from the conversion from 61 to 41. Again, notice the numbers for Australia, which is seeing some steep declines as far as number of units, aircraft in the fleet. Australia lost 28 airplanes on the fixed wing side, and then 8 airplanes on the helicopter side. And that is coming from that they did see some schools that ceased business. These include Southern China Airlines and also ST Aerospace, both of those academies closing in Australia. So that's certainly what dragged down the numbers in Australia. Mm-hmm. Looking at the training school and the courses that they offer, in Asia Pacific region, you have a total of 356 schools. 270 of those are fixed wing, so 74% of the market, or 3/4 of the market, is just fixed wing schools. And the majority of those courses that they're offering is obviously private pilot license and commercial pilot license. The course that's being offered that is if you will, the least attractive are the airline transport pilot licenses. The difference there being the ATPL typically has a requirement of 1,500, if you will, flight hours, whereas your private and commercial pilot licenses have a requirement only of maybe 250 hours. So more and more the trend being towards the easier to achieve, if you will, private and commercial licenses versus the airline transport pilot's license. Looking at the fleet itself, and this is in fixed wing, you can see the market is dominated by single-engine piston aircraft, maybe not too surprisingly. And that's where all the fleet is being added, and that's where you're seeing significant growth as well. The most popular models when you look at the single-engine pistons are Cessna 172s and Diamond DA-40s. These are the most popular single-engine piston models. Looking at it from an OEM standpoint, then, given the 172 and the Diamond are the most popular, Cessna and Diamond from an OEM standpoint certainly dominate the market. Between the two of them, they're almost 70% of the market. Okay, if you throw in Piper as well, you're at 80%. So certainly where you see the net fleet growth and the annual growth rates are in those 3 manufacturers. Interesting to know, certainly Diamond and Cirrus are growing at double-digit numbers, versus Cessna, which is only a single digit. So you've got 4% for Cessna, but 12% for both Diamond and Cirrus. So you can see that those models are being added at a much higher rate. So again, the expectation would be going forward that Cessna's market share is going to be continuing eroding over the years. On the helicopter side, the market is pretty much evenly split between piston helicopters and then single engine turbine helicopters, 43 and 42%. Again, most of the growth is coming in both those categories, and annual growth is pretty much matched for both those categories as well, 4% and 3%. The pistons are normally used for sort of initial training, whereas the single engine turbines are then used for the actual type rating in the model or used for special training. On the piston side, the most popular models are the Robinsons, the R22 and the R44, also some Schweizer S300s. On the single turbine, you're seeing a lot of 125s and Bell 206s. Those are the most popular models. What this means for the OEMs, again, not too surprisingly, Robinson, 35% of the market, Airbus, 27% of the market, and then Bell, 25% of the market. So those 3 big OEMs dominate the market here. all are experiencing equal fleet growth pretty much, and then also equal annual growth rates. So all of them are growing within 1% of each other. So moving on to one of the special features now. Obviously, for 2020, you need to focus on COVID and what its impact has been on training. This is probably a chart that we're all too familiar with. You've got the yellow line, which represents flight activity, and then the black bars coming up represent COVID cases. As COVID, if you will, broke out in February 2020, as we all know, the next 2 months saw flight activity practically drop down to zero. If you will, we've been fighting COVID ever since, and it's only recently that we started to see the flight activities start to make their climb from zero back up to any sort of level of normalcy. So the effect that this had on pilots were that obviously a significant number of pilots were laid off, furloughed in that early 2020 period when flight schedules and flight activities pretty much dropped to zero. The effect then was two. As I said, pilots were laid off, but also the issue on the other end of it, because of the travel restrictions, is that a lot of students that wanted to travel to complete their training weren't able to do so because of the restrictions on travel, or just simply couldn't get the visas that they needed. So it was kind of a two-pronged effect in that, if you will, the supply that was in the market at the moment was cut off, and the resupply that was meant to come from the training schools was cut off as well. So a very dramatic situation as caused by COVID. Talking to a number of schools in the region, though, what are their insights? Interestingly enough, some schools, yes, were impacted significantly, and after just 6 weeks closed up shops, whilst others, though, have still remained on sort of a pause today. So some have managed to, if you will, struggle through the COVID downturn, but others have not fared as well. All the schools that we talked to certainly have had to introduce new policies, not only for staff and students as far as getting there, but also new health and safety concerns and procedures in the schools themselves. Some of the schools that were able have pivoted, as if you will, and moved a bulk of their courses online, even though the students couldn't get to the get to the school itself. A good majority of them tried as best they could to move those courses online and still then give the students the ability to learn online, but also for them to at least use some of the time while they waited for, if you will, the travel requirements to open up in visas, for them to still achieve some of the course curriculum. Generally, though, as most of the schools we talk to as well, they're all very positive about the near-term future. They do see the industry recovering in a relatively short period of time, and most of them agree with most of the other industry experts regarding a 2023 recovery. So again, at the same time, most of them were positive. Some are starting to see those foreign students trickle in, and so that also gives them hope for the immediate future. Talking about that pilot demand, then, we do have forecasts. Most of them, though, were made in 2019. So what does this mean? Certainly, all the events and effects of COVID-19 seemingly invalidate those 2019 forecasts, and that's true to a certain number. As I said, a significant number of pilots were laid off in 2020, and some took early retirement, as was offered by a lot of the airlines. Okay, but the general consensus is, again, talking to the industry, is that, as I mentioned, we will see a return to pre-COVID levels in 2023, or by the end of 2023. First, this will be led by domestic services resuming, and then finally we'll see international flights and demand returning later after that. So in a sense, what really happens is that 2019 10-year forecast simply shifts over to 2023. There's a COVID recovery period, this sort of U-shaped recovery. If you remember the chart you saw earlier, which showed the yellow flight activities dropping off steeply, flattening out, We expect to see the climb back out of that towards 2000 and end of 2022 into 2023, where towards the end of 2023, we hopefully have clawed our way back to where we were 2019. So the forecast really just kind of shifts to the right, if you will, 4 years. One of the issues that will have to be relooked at, though, is there was a significant number of pilots that did take that early retirement. So what will be the effect of that on the pilot supply coming up and demand in that post-2023 period? So if we take a look at graphically, you can see in 2019, we were looking at an active pilot pool, if you will, here in the Asia Pacific region of 106,000. And so that requirement, after the market claws its way back and we return back to where we were pre-19, so you'll see we've got year-end 2023, we're saying you're going to claw our way back to that same level, 106,000. So then going over the next 10 years from there, we see that you're going to need 95,000 pilots over that 10-year period. And where that's going to come from is 20% of that the need is going to come from retirements, and 70% of that is going to come from future growth. Again, this is the assumption being that we return to normal come the end of 2023, and all those growth rates and forecasts that we had in 2019 then apply going forward. Some of the, I guess, areas that we're going to have to look at that will probably represent some change is that, and this looks at the additional pilots. So we're saying we need additional pilots both for commercial aviation and business aviation. The compounded annual growth rate is 4% and 5%. And again, that matches the sort of rates that we were seeing for the training school growth. So we're okay there. But the issue you have is that pilot ratio it's pointed out here between wide body and narrow body. I wouldn't be at all surprised to see that ratio change. As we know, a lot of travel patterns and needs will have changed as a result of COVID. And so whether that wide body requirements is as high as it was 2019 versus now, we'll have to wait and see. So the mix of the pilot ratios may change versus wide body versus narrow body. Pilot retirements, we see here we're talking about 21.5 thousand pilot retirements. Again, this may still hold true or may not. The issue you may have is that a lot of the pilots that are included in this number were already offered early retirement from the airlines. And so that pilot retirement has already occurred. So the hope is that when we get to 2023, you may not see as many pilots retiring because they've already done so. I guess the good side to the story there being so that training school feed of providing pilots is going to have to kick up a little bit to make up for what will not be as many pilot retirements. Again, talking to most of the training schools, as I said, they're optimistic, and they're also saying, look, in order to be ready for 2023, students need to enter into the schools now. As we all know, the schools takes a while to go through the course and then takes a while to build your hours. And that's going to take 2 or 3 years. So most of the training schools are, as I said, fairly optimistic about the future. One of the special features we also touched on is where people are going to get trained. Asia Pacific obviously has a large body or requirement for pilots. Yes, some are, if you will, trained within the Asia Pacific region, but a good portion of them also go overseas to get trained. And so here we break down the CAAC approved overseas training schools to give you some idea of where people are going. Basically, this is the demand. This is where the schools are, which obviously we feel matches where the demand is as well. And we also think that China, as a representative body, is probably indicative of what you see across the whole Asia Pacific region as far as preferences on where to go for training. Not too surprising then, you're seeing the 2 big markets being the United States and Australia. Those 2 are the most sought after destinations when it comes for overseas training schools. And again, if you look particularly at the CAAC and their breakdown, you'll see only 50% of their pilots are coming from domestic schools. The rest of them are trained overseas, with the vast majority of those being in the United States. 30% of the pilots required for the China market are coming from the United States, and then 8 and 7 for Australia and Canada. So if we sort of go again on that, China represents what we see across the whole Asia Pacific, we would expect to see the same sort of trends in other countries as far as where their pilots are going to get trained. So in the report, of course, we touch on pilots, but as we all know, that's not the only training that is required in our industry. There are many, many facets to the aviation industry. So the training report this year also touches on special mission training, charter services training, cabin hospitality training, safety training, aircraft broker training. There are many, many, many facets to our business, and all of those require special training. And there are certainly organizations and institutions out there, management companies that are providing that kind of training now. So we do touch on that as well and give some insight into some of the other training that's available in the region for some of these other facets. Well, that's a quick overview of the report. Please, I hope you will join us for the rest of the virtual week, which will happen tomorrow. And thank you very much for watching the presentation.